Well, the stock in focus is Ambuja Cement ahead of its earnings. Now, what has actually happened is that as far as the entire cement universe is concerned, you're talking about ACC that has come out with its numbers, and ACC has actually come out with a very robust set of results. Now, remember, realization trends, that basically means the pricing actions that ACC saw was quite strong, and this was something that actually came in above what the street was anticipating. In fact, when you're talking about ACC, what the company said was that given very strong operational efficiencies that the company managed to keep amidst the lockdown, and also pricing being quite resilient, the company was able to expand its margins. Also, Heidelberg Cement, spoke to Itina and said that despite 2 months of almost no activity, they are expecting capacity realization trends to hover around the 65 to 70% mark as far as the rest of FY21 is concerned. So, amidst all of this, what analysts are anticipating as far as Ambuja Cement is concerned, again, they're expecting a significant volume drop. They're expecting volumes to drop anywhere between 28 to 35%, very, very high, high 20s is what you're looking at as far as Ambuja is concerned. Now, what is actually, the ET Now poll? Revenues are seen at close to 2100 crore, down 30% on a year-on-year basis. Key figure to watch out for would be the EBITDA. Now, EBITDA would, is seen down almost 43%, but if, there is any surprise, it should be on this particular front. Cost efficiencies, any benefits of the MSA, the Master Supply Agreement, as far as Ambuja and ACC is concerned, lower input prices as far as petcoke is concerned. These are some of the efficiencies that could kick in, and this particular line item, the EBITDA, is something that could benefit it. All of these actually come in. Now, the other thing to keep an eye out for, of course, would be the bottom line. Bottom line is seen down almost 23%, and some of the key factors to watch as far as Ambuja is concerned, again, any benefits accruing from the MSA agreement with ACC, the kind of volumes that the company saw amidst the pandemic, what is it that the company is saying in terms of how they're expecting construction activity to pan out post the COVID, and what kind of volumes that they are analyzing as far as FY21 is concerned. A very important result to watch out for, and it will keep the entire cement sector in focus, and this particular number is expected on Friday. One of the important things what Citi is saying is that Citi is expecting volumes to decline close to 29% on a year-on-year basis. Now remember, last week of April 20 onwards, you actually saw almost nil activity. So 2 months and maybe a little over 10 days is all the activity that the company saw. Also, one significant and important thing to watch out for would be the company's commentary in terms of how they are seeing trade as well as non-trade segment margins actually panning out. Now remember, government construction activity has been the sole hope as far as the entire sector is concerned, given that home buying activity and home building activity has been very muted. So what Ambuja as well as ACC and other cement majors would need to watch out for is that any kind of green shoots witnessed as far as home building, home construction activity is concerned, and any commentary on this, any sound of positive commentary would be taken very well by the street.